Hi, everyone. Today, I want to talk about stocks I'm trading. Every Wednesday, I go over a couple of articles related to the stocks that I'm trading. And first up this week is Crowdstrike. Crowdstrike is set to announce earnings this evening, but that hasn't stopped some analysts from upping their target from $120 up to $130 per share. And the fact that these analysts are raising their targets could be what's driving the stock higher. Second up for today, Apple is preparing to sell 75 million 5G phones, along with new watches and an iPad. Cupertino, a technology-based firm, anticipates that Apple could reach as much as 80 million units sold in 2020, as if we needed another reason to be bullish on Apple. And lastly, for this episode, Uber's rideshare business is a mess. Uber has obviously been suffering from the Rona, with their bookings plunging 73% year over year. However, they are pivoting to Uber Eats and cost-cutting measures. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying this 4-bed, 5-bath mansion in Spring, Texas, or if you just want to be part of a well-educated financial community, definitely like and subscribe. It has a massive kitchen and a master bedroom to match. A very classy master bath, but the best part is the pool and hot tub. It's currently on sale for $1.2 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Looking at Crowdstrike right now, it's up over 15% in the last week, but it's swinging around pretty violently here in the final day before earnings. Moving on to the article, why Crowdstrike popped right before earnings. Shares of Crowdstrike holdings were up 5.8%, and that price jump came ahead of earnings. As I mentioned, they raised their price target to $130 per share, and partially this is because they are predicting a strong earnings for second quarter. Looking at the metrics, their revenue is expected to be up 82%, and they are looking to reduce their losses to only 5 cents per share. Looking at my position, I'm currently short the 120 puts with a September 4th expiration, which is the day after earnings. The option prices have been pretty wild today, and they shot up over $1.50 per contract for this spread, but I'm still confident the stock will stay over $120 at market open tomorrow morning. Moving on to Apple, they're up over 2% in the last week. However, today they are dropping pretty heavily, and they are currently down 3%. Moving on to the article, Apple is preparing to sell 75 million 5G iPhones along with its new watches and iPad. From 2012 to 2019, they sold over 1 billion iPhones, which is pretty ridiculous. But that does put into perspective the 75 million 5G phones, and it makes it seem more plausible. Along with the new iPhones, they're planning to release a new iPad Air with a new edge-to-edge screen and 2 new Apple Watch versions. They're looking at their first over-the-ear headphones to compete with the Beats brand, and there are rumors that a HomePod speaker is also in the works. Some of the suppliers in their supply chain were also up based on the news, which further gives some credit to this analysis. Apple and its manufacturers regularly ramp up production ahead of iPhone releases, and their targets were around 75 to 80 million units. Obviously, the Rona has disrupted some of these supply chains, but Apple is still seeing strong demands for iPhones, iPads, and Mac computers. iPhones regularly generate half of Apple's sales and can sometimes top 60% during the holidays. The 75 to 80 million phones are going to be split into 4 categories, 2 basic and 2 high-end models, which will feature OLED screens and 4 different phone sizes. They plan to ship out the lower-end phones sooner than the Pro devices, which is part of their staggering release strategy. And on top of all of that, they plan to release OS 14 in September. As I mentioned, the stock is falling today, which means the price of this put credit spread is going to go up, which is not what I want to see as an option seller. But I still have a long time for Apple to recover, and it still has to fall quite a ways before I actually lose money at expiration. I'm currently short the 16 October puts, so we'll see how this one plays out. Looking at Uber, this one is also down almost 2% on the day. It seems like tech is finally having a little bit of a correction, which is fine. I still have quite a bit of room until I'm in a losing position for Uber. Looking at the article, they say Uber's rideshare business is a mess. However, the food delivery service is doing very well. Uber shares have obviously been very impacted by the Rona, and their rideshare business has decreased substantially. Bookings are down 73% year over year, and they are trying to pivot as much as they can over to the Uber Eats side of the business. An analyst wrote that their rideshare business is struggling heavily due to the continued Rona lockdowns as well as the false start recoveries. The rideshare business is the largest part of Uber, and it is their most profitable business. They continue to see improvements through July, and demand is really improving outside of the United States. This analyst still gives them a price target of $40 per share. Despite all the tension, the stock is still up more than 10% in 2020, and the Uber Eats chief executive mentioned that their revenue is up 103% to $1.21 billion. DoorDash still is number one in terms of food delivery. However, Uber Eats is continuing to gain ground. And on top of that, they acquired Postmates, which they expect to close in the first quarter of 2021. Uber is also facing some regulatory hurdles in California, where they were recently told that they could no longer classify their drivers as independent contractors and that they would need to employ them as employees, which means that they would need to provide lots of benefits and a schedule. And this really defeats the purpose of Uber as a business. The idea is that Uber workers can contract and work whenever they want to work to generate income on the side. But if Uber had to take over as an employer, then they would need to generate schedules and be much more invasive in the lives of their drivers. Looking at my current position in Uber, I sold the $31 puts for October 16th, and I received an $85 credit for that. And I also sold a covered call for October 2nd, and I received $1.37 per share for that contract. I'm expecting those shares to be taken at $31 a share, which would leave my put position worthless at expiration. To summarize, Crowdstrike is expected to do very well on earnings. Apple is expecting to sell 75 million new cell phones, as well as launch new lines of products. And lastly, Uber ride-sharing is not doing very well. However, Uber Eats is helping the business, and it seems like they are starting to recover. Clearly, this thing is a prototype, but it seems to be working pretty well, and I wonder how fast that thing can go once they get it out of that little space. Looks like a good time. Let me know down in the comments section what you think of it. Like and subscribe before you go, and have a great day.